So I would like to introduce to you our first speaker, who is Dr. Dean White. Dr. Dean White is Bursar and Clerk to the Governors at Stamford Endowed Schools. Previous to that, he was qualified as a chartered accountant, has been a finance director of an international school, and was Bursar at Ashfield College in Harrogate. So I'm absolutely delighted we've got Dean here today. Knowing Dean as I do, I know that his talk will be really practical and useful. There's a lot that we need to know about finance as aspiring heads or current heads, and Dean hopefully is going to tell us the things we need to know and the things that we don't. So without further ado, I will hand over to you, Dean. Thank you.
Okay, well, you've stolen my first 30 seconds of thunder there of introducing myself, but
oh, sorry,
right.
I apologise.
Let me first of all bring up my slides, so yeah, I think yeah, Alicia's done the introduction. As a background, I was a chartered accountant and now been a bursar for 6 years, so I'm starting to get a grip of understanding finances in school. So if it's all right with everybody, I've got sort of 5 or 6 hours worth of slides to go through and then a test to be circulated around for everybody afterwards. But Fathoming Finance for beginners, and focus particularly on the school. So where's next? So four main things that I'm going to go through. So a bit of an introduction to accounts, what's actually in them. I want to talk about the difference between surplus and cash, which is absolutely key to understanding sort of finances and how they work. What do schools spend their money on? And then what sort of questions should you as a head be asking your bursar? And what sort of questions should be asked by the governing body? What's financially important for you? So hopefully we go from you sort of being looking like this when you get asked a finance question to being slightly more confident and erudite. So accounts. Let's start with, first of all, 2 different sorts of accounts: statutory accounts and management accounts that accountants will talk about. So statutory accounts, what I want to start with, are publicly available documents. They are available, I've put the address up there, on the Charities Commission if you are a charitable school. If you're a for-profit school, so a proprietorial, then they're more likely to be on Companies House. But for maybe 80% of schools in England, Charities Commission is where you would look for them. So what's included in the statutory accounts? So first of all, they're annual, so they're produced once a year. They're audited, which for those, auditing may be a term that you've heard but sort of don't necessarily fully understand. So auditing is where once a year external accountants come into the school and check that your accounts are true and fair. So basically, the audit is the finance department equivalent of your ISI. So it's somebody independent coming in and saying your accounts are correct. So when your bursar or the accounts department are saying that they've got the auditors in and complaining, please have a little bit of sympathy with them. It's actually quite a big thing for the finance department. And then in terms of content, and we'll come on to this in a little bit more detail over the next few slides, but effectively you've got trustee report, which is the big narrative bit. As a head, that's the bit that you're most likely to be involved in. You may be involved in writing that sort of first 15, 20 pages at the start of the accounts, which got various purposes. It has to include information about the structure of your school. That's a requirement. It talks about the governance and the charter that's behind the school. But then also is an opportunity to talk about your achievements over the last year, your strategy, what your risks are as a charity, and most importantly, over the last probably 3 or 4 years, there's now a requirement to talk quite extensively about your public benefit. So this is your opportunity for the school to say what it's doing with the maintained sector, what it's doing with local charities, how many bursaries, means tested bursaries it gives out. So there's quite a lot of information in that narrative. So if you are applying for headship, that's the first place you should sort of go to read and understand about a school's financial position. So you've got that narrative. You've also got the audit opinion, which is just a two-pager with the auditor saying, yes, these accounts are correct. And then you've got the actual numbers, which are broken down into 4 sections. You've got statement of financial activity, balance sheet, cash flow, and then the notes, which we come on to now. So statement of financial activities, that's the terminology that gets used in charity accounts. If more commonly, the rest of the world, we would call this a profit and loss account. But in the way the charities accounts are set up, it gets this peculiar name that you'll probably never hear anybody talk about. Alternatively, it's called the SOFA, the Statement of Financial Activities. But what it's showing, effectively, is the income and your costs for the year. And this, the profit and loss account, it does cover a year, so it's going to cover a 12-month period, and it's basically the financial review of that period. So as you can see on this is the last year's accounts for Stamford. I'm not revealing anything because as I just said, these are available publicly. Starts at the top here with the income, or from various different sources. It then moves on to our costs and our expenditure, what we spent, and then at the bottom it starts to show you the profit. So this 854 right down in the bottom sort of right hand corner is ultimately the profit that or the surplus that Stamford Endowed Schools made last year. The other thing to note is you'll see there's various different columns here, which is quite important from a charity account perspective. If you were just looking at limited companies or a private company, you wouldn't have these various breakdowns. You would just have this year's and last year's numbers. Whereas for a charity, it gets all these various balances get broken down into 4 different sections. So you'll see it along the top here. For Stamford, we've got unrestricted, restricted, and endowed. But there are four different categories of funds, which are unrestricted, which is this main one. These are basically your general purpose funds. A charity can use unrestricted funds for anything it wants. That's the money you're spending day to day. If you had them, the next column would be designated funds. So designated funds are basically unrestricted funds that the governors, the trustees of the charity, have put to one side saying we're going to spend them for this purpose. So it's a little bit like you getting your salary every month and saying, I put £100 aside a month to pay for my holiday. They've put that money to one side. Restricted funds. Now these are funds that the charity will have been given at some point with a very clear instruction that they can only be used for a certain purpose. So this might be people saying, okay, I'll make a donation of £100,000 and I want that to be used for bursaries, or I want it to buy the new school minibus. So restricted funds can only be used for a particular purpose. And then at the far extreme, you have endowed funds. So this is capital money. This is something that the school has been given in the past, but it's not allowed to then spend. So this would be maybe given some land, or you may be given some investments or shares, and you can't actually spend the capital of that. All you can do is spend the income that comes from it. Just highlighting again this 854. Keep that number at the back of your mind, because we'll come back to that in a second as the profit. So that's the profit and loss. The next sort of major report we would have is the balance sheet. And whereas the profit and loss account is the review of the year, the balance sheet is a snapshot on one particular day. So the balance sheet is prepared on the last day of the financial year. So for us, that's the 31st of August. And what it shows effectively is what the school owns and is owed on that particular day. So working from the top, fixed assets. So this is what we own in terms of buildings, computer servers, furniture, minibuses, and also, in our case, a small amount of investment income. So these fixed assets are things that you're going to be using in the school for more than 12 months. They've got a life of more than 1 year. Next, you've got the current assets, which are things that are going to be used within the next 12 months. So for us, it's stock, which is it's uniform in our case, we've got in the school shop. Debtors, how much money that we're owed, and then cash and deposits here. So what have we got in the bank? creditors. So creditors is then the accountancy term for basically how much money that we owe other people. So within there, for us, there is some borrowing. So we've got some bank debt. We also owe our suppliers. At the end of the year, we owe the taxman some money for VAT and pay-as-you-earn taxes, which is entirely normal. So if you add those all together, the fixed assets, our current assets, take our liabilities, you come back to this figure at the bottom of net assets, 29.4 million in our case, which from an accounting perspective is how much our school is technically worth from an accounting perspective. Balance sheet is sort of by its name implies that it has to balance. So you'll see this 29,467 in two places. So our net assets are 29.467, and down here we've got 29,467. So this is exactly the same number, but presented in two different ways. So in the top half, we show that 29 million broken down between assets, liabilities, fixed assets. At the bottom half, we then show that same number split between the various different funds. So if you think back to what we just saw on the profit and loss, it's the restricted, it's the unrestricted, and it's the endowed. So you come back to the same number, but you're showing it in two separate ways. The other final thing to note on here is you'll see that there's four columns, group and charities. So in our case, we've got a subsidiary which runs our shop and the sports centre. The group is the school and that subsidiary added together, and the charity is just the school on its own. So you'll probably see that in your own school accounts. And then the third element, or the third big part of the financial accounts, statutory accounts, is the cash flow statement. So this one is, what this is trying to do is it takes the cash from the start of the year and it looks at the cash at the end of the year and it says, how did you go from one to the other? So if we just whiz back to the balance sheet, you'll see our cash is 597 and 1122. And then in the cash flow statement at the bottom here, you can still see that 597 and the 1122. Now, what you can then see is in this sort of middle section is how we've spent the money that we've generated. So we purchased some fixed assets in the year, 1.2 million. We purchased some software, 39,000. We've paid back some bank borrowing, so that's 230,000 going out. So you can see the movement. The top number is, if you recall, I just said remember that 854 from the profit and loss account. If cash and profit were the same, which is what we will come on to in a second, that number at the top there would be 854. What's important to note is that actually your profit isn't quite your cash for various different reasons. So this number at the top is kind of your profit, but not quite. So you take your profit, you add back all the money that you spent, you add back any money that you might have come in your loans and the like, and then you can reconcile your starting and finishing cash. For an accountant, that's probably one of the most important parts of the accounts. For most non-accountants, it's probably the most impenetrable and bit that you will ignore, but just to understand that it's there. So that's statutory accounts. The other part that we've got, other set of accounts, we've got management accounts. So whilst your statutory accounts are a public document, your management accounts are private. They're there for you, for your governors, and probably your bank will ask to see them. So these are accounts that won't go to parents and the wider world. Most schools do them termly. If I was you and I was ahead, I would say to your bursar on day one that you want monthly management accounts, and we'll come on to some of those reasons as we go through the rest of the presentation. And whilst your statutory accounts are really quite formulaic and there is a set way that they have to what they have to show and the way they're set out, your management accounts aren't. I list there some of the things that you would expect to see. So you want to see, how we can performing against budget. What does the rest of the year look like? But what does our cash look like? But there might also be non-financial data in there. So there might be a graph showing you your pupil numbers or your your head count. What will also very definitely be in there is a narrative that explains all of that data. So the numbers alone are just data of no use to anybody. What you want from a good bursar or from a good accountant is for them to be taking that data, turning it into a narrative that allows you to ask us questions of so what? You know, if that's what the financial show is showing, what decisions can I make? How am I going to manage the school differently because of this information that I'm getting? So the management accounts are very much there to help you make decisions and manage the business on a day-to-day basis. And that's why I'd say that you need to be seeing monthly, not termly. You want to be making those decisions as quickly as you can. So next sort of part to move on, we just touched on cash. It is key to understand this because if you get profit and cash mixed up, it can to be blunt, you can really fall on your bum when you come to try and build things and invest in things in the future. So depreciation is a term that you've probably come across. And if I'm honest with you, I've not yet come across a teacher who can properly explain and understand what it means, but it's a very significant accounting concept. So basically, with depreciation, we're taking the cost of a fixed asset, so our building or our minibus or our computer server, and spreading it over the life of of its use. So quite simply, if you go and buy a birthday cake, and as Alicia just alluded to, I used to work up in Harrogate. So if you went to Betty's and bought yourself a nice expensive birthday cake or Christmas cake for £12, that's the cost of the whole cake. It costs you £12 at the time that you buy it and pay that £12. If you then cut it up, that cake suddenly becomes 6 £2 slices. So instead of being a £12 cake, it's £2 per slice. So what does that mean for a school? Well, picture here of this is Stamford School on the left, which our main building. So in our accounts, Stamford School is valued at 10 million. In truth, it's worth an awful lot more, but in an accounting perspective, it's sat on the balance sheet at £10 million. Now, accounting regulations say that we then have to spread that cost over the life of the asset, which we've determined the life of that asset is 50 years. Now, I know in truth that building is already 400 years old and it'll probably last another 300 or 400 years, but just accounting rules say that you have to spread it over a certain period. We've chosen 50. So in our balance sheet, the building is sat there at 10 million. In our profit and loss, every year I have to charge £200,000 to the profit and loss, which is basically to say that's the cost. That's this year's share of that building. That's one slice of cake. So thinking back to this difference between cash and profit, as you can see, that 10 million, the school paid that 10 million a long time ago. That's cash that's being spent. This 200,000, whilst it's going into our P&L, profit and loss account every year, it's not actually cash. We're not spending that amount. It's just hitting our it's a cost in our profit and loss account. So what does that mean then in terms of what you actually start to see in your account? So surplus profit means the same thing. Very much an accounting term. It's not black and white. As a good accountant, I can basically, in truth, I can make your profit be whatever I want each year. I can make assumptions. I can affect the timing of when costs or income hit the profit and loss account. So it's not a definitive number. It's not black and white. It's in a world of accounting way. Whereas cash, very simple. You've either got cash or you haven't. You've got money in the bank or you haven't. So cash is a much simpler measure. So let's sort of put that into a real example of what it might look for in a school. So in this particular example, let's assume the school's got 5 million of income, it's got costs of 4.5, and it's got buildings worth 20 million. And then in the year, it does a building project, it builds stuff, a new hockey pitch, but a parent also pays fees in advance in the year. So if we looked at our profit and loss account, so the SOFA, the statement of financial, we see you've got the income of 5 million, we've got the operating costs 4.5 million, and just as a side, to me this is always normal to show minus numbers in brackets. Apparently it's an accounting thing, so if that's something that's not familiar to you, an accountant, when they put numbers in brackets, it means minus. So cost 5 million, operating cost 4.5. As we've just sort of seen with our previous example, we then have to charge this depreciation. So in our example that we've got here, it's 20 million, divide it over 50 years. So there's a £400,000 charge to the profit and loss. So this school would have a surplus of 1 million. That's what would appear on the profit and loss account. Our cash, however, we've got that income, we've still got the income of 5 million, we've still got the costs of 4.5 million. But we don't have any depreciation there. So that depreciation, as we've just said, that's not cash. That cash was down a long time ago, so we don't need to charge that 4 million for cash. We do, however, have to charge the full 1 million that we've just spent on building the new hockey pitch in there, but we can add back the £1 million of the fees in advance that the parent's shown. So whilst this school's made a profit of 100,000 in the year, its cash has actually reduced by £400,000 in the year, which, as I say, when you come to sort of thinking about investments and capital projects, that's what you need to be sort of thinking about and working with your Bursar. What does the cash look like? Not necessarily what's our profit at the moment. So nextly, where do schools spend their money? Now, so the table that I'm just about to sort of, I'll flash up, assume it uses nice round numbers, which assumes that you've got a day boarding school of around 600 children, and it's probably an all through school, so 2 to 3 up to A level. So, and it would be a school that of probably in the Midlands to make it average. So if you're thinking of, if you're a senior school only, or you're a prep school only, the numbers might be different. Or if you're a day school or a full boarding school, the percentages would be different. If you're in central London versus Scotland, the numbers would be different, but probably all there or thereabouts in this sort of area. So, and again, if you're a for-profit school, a proprietorial school rather than charitable, they might be different, but they'll all be roughly in this sort of this field. So in this example, I've started with a school of 11,235,000 of income. I've only used that number to make the following sort of calculations a little bit more simple. The average school in the UK at the moment, or in England at the moment, is giving discounts of about 11%. So that's your bursaries, it's your scholarships, it's staff remission, forces discount, it's parents just negotiating a lower price with you. So if our gross fees are 11 million, our net fees, so our fees after we've given all of those discounts, is probably about 10 million. How do we then spend that 10 million? What does that look like in our profit and loss account? By far the biggest number, and we'll come on to this in a second, are your staff costs. So that's your teachers, your support staff, your teaching assistants, it's their salaries, it's their national insurance, it's their pension, it's private health if you offer that to people, and all of those benefits. Non-teaching staff costs, this is your textbooks, it's your art materials, it's trips to the library, it's new badminton rackets for the PE department, it's things like that, it's chemicals in the science department, things that you're using in the classrooms. And as you can see, that's probably surprisingly low at 500,000. And those of you who are deputy heads at the moment, or deputy head academic, that's probably the sort of the budget that you're managing, or part of that. That's probably the bit that you're seeing. Welfare costs, this would include the food, your food, so your lunches. It would include school nurses, any counselling that you might offer in school, those sorts of things, your first aid training. Premises, as you can see, that's now another big number, around £1 million. That would include your rents, your rates, your electrics, your gas, your insurance, probably your fuel for your minibuses. It might include your buses that you use for home to school each day. It's a big number. It would also in there have your maintenance. It's a big number, and it's quite easy to say, well, that's the one, if we're ever trying to find savings, that's the first one that we can achieve savings in. But it's probably also one where actually most of those costs are fixed. So your rates, your rent, you're not going to change those very easily. Yes, you can reduce the amount that you spend on maintenance, but every year you still need to do your Legionella testing, your electrics testing, you're maintaining your fire alarms, all of which are effectively a fixed cost. So whilst that 10 million seems an easy target if you're looking to trim costs, they're probably only 100, 150,000 in there that's actually discretionary spend. The rest of it is going whether is effectively keeping the lights on. Management costs, this is a fairly small one. This is things like your ISI fees, it's your audit, it's professional fees, bank charges and the like. Again, probably not a huge amount that you can do to control that. And then depreciation would be the final one that you would see on there. So, and again, as we've touched on a number of times, that's a cost, but it's not actually cash. What you might also have on there, depending on the structure of your school, is an interest charge. So if your school's got some bank borrowing or bank debt, you would see an interest charge as another line on there. You could also see your donations in there. So if you've got foundations or you've got a lot of people giving you money, that might appear as a separate line of income. But these numbers are, as I say, are pretty average. These are sort of based on surveys of about 800 schools in the country. This is where you come out. This is what the average school in, as I say, in the average part of the country with average number of pupils would look like. So sort of carrying on a little bit with that, I just want to sort of emphasize something. And this, I'm not picking, before I get here, I'm not trying to pick on anybody. I just want to sort of really flesh out something that might not be obvious to those of you who are sort of deputy heads or haven't yet stepped into headship. So if this is our pie chart of total costs, so ignoring the depreciation, on our previous example, we had total costs of 9.3 million, of which 7 million were staff costs. And that's, as I say, that's average. If you then break that 7 million down, in the average school, 5.1 million of that is teachers, and 1.9 million is everybody else. That's your admin support, your finance, your HR, your marketing, your IT, your lab technicians, your teaching assistants, your caterers, your cleaners, your bus drivers, your groundsmen. If you then break down that 5.1 million of teachers, you'll see that salaries are about 3.7, pensions 880, and your national 450. So 2 points to think. I don't want to sort of get distracted by TPS, but you will all know that there is a conversation about TPS across the sector at the moment, and the cost of it. And in the average school, you are spending more on teachers' pensions than you are doing on all of your textbooks and all of your teaching materials. You're spending more on pensions than you are on all of your food and welfare. So I'm not making a comment about whether schools should or shouldn't be in TPS, just flagging up that this is why Bursar's governing bodies and heads have been so perplexed by that number over the last few years as it grows. And the other thing to sort of note from, as you can see from this slide, is that if you are one of those schools that's having to identify cost savings and cost opportunities, 5% save on teaching costs is more than 10% on everything else. on all of your others. So, you know, that 5% of that 5 million is more than 10% of all of your, and I can tell you now as a bursar, you are not going to save 10% on your gas, your electric, your catering, and all of those other costs. So you are never going to make that 2.3 million, 2 million without some really very significant changes in the way your school runs. So whilst it's always very easy to look at the Bursar to try and identify costs, and I think Russell will come on to this in a little bit in his talk, is that actually it's your timetabler has as much control over the costs of a school as your Bursar does. So how you're actually utilising your teachers, and we'll come on to this in a second, is what drives that 5 million. So yeah, if you're ahead, remember that, you know, it's quite easy as a deputy head to be saying, well, we can save some money on photocopying and by turning the lights off. It really doesn't make a huge amount of difference in a set of school accounts. So with that in mind, what are the questions that you should be asking as your head? Where should you be focusing? So on a weekly basis, perhaps a monthly basis, these are the sorts of things that you should be talking to your Bursar, your head of finance about. So cash. How much cash do we have? What does our cash position look like? Now, if you're at Winchester College and you've got 24 million of cash in your bank and you've got 260 million of investments and shares and land, you're probably not that worried. If you're like 95% of schools in the country, cash at the moment really is what should be at the forefront of your mind in the sort of the current COVID crisis. Ultimately, it's cash that pays your wages each month and it pays your bills. So if your Bursar isn't telling you about the cash position, you need to be asking. As I said, unless you're at Winchester, Harrow or Eton, and cash is probably less of a concern for you. Debtors, so which parents haven't paid us? Who isn't up to date with their fees, and what are we doing about it? How are we chasing those debts? It's perhaps something that's not really been on your radar as a deputy or as a head of sixth form or something, but as a head, I'm afraid this is the sort of conversation that you need to be getting involved in regularly and need to be a part of and supporting your Bursar on debt collection. Then the other thing that you'd be talking about on a monthly basis with your Bursar is, where are we against the budget? Which departments are overspent, underspend? So, whilst I said previously, the heads of department and the deputy heads might not have a huge budget in the grand scheme of things, they still do have a budget. And if your geography department has a budget of 20,000 but spends 22, that chips away at your surplus. As we saw, the percentage of surplus is fairly tight. So keeping on top of all of your budgets is important. I would, as a informal tip, and apologies if anybody is a director of sport on the call, watch your director of sport. They've got quite a big budget and they have a tendency to spend it. And if you're currently a deputy head, go and have a look at your director of sports budget, because as I say, they'll be the one that always go over first, and they'll always have a good reason why. So if you talked about your budget with your Bursar, that's looking at your historical, where are we now? Also be asking the question of where are we going to be at the end of the year? So what does the next 12 months look like for us? So that's the conversation you should be having on a monthly basis. What conversations should you be having with them sort of termly on an annual basis and sort of more strategically about finance? And I've broken this down here into two sections, so income and costs. So first of all, fee affordability. Can people afford our fees, and what level should we be setting our fees at? So, I mean, we're all conscious that school fees are not cheap, and that squeezed middle, there's a lot of evidence of finding it even harder to access independent education. So if you think, average fees for day pupils are about £15,500 across the school, more in London. If you've got 2 children, you need a fairly significant salary to be able to afford those fees. So people are being priced out of independent education, which obviously is not good for us. So are we setting our fees at a level that's affordable in our local market, in our geography, knowing what our parents do? And then fee assistance. Well, what does our strategy want to be for fee assistance? Can we still afford to offer scholarships? Is that the right thing to be doing? How do we target bursaries? There are some schools out there, predominantly London day schools, who have a very deliberate strategy of setting their headline fees higher than they need to be, because they know 80% of their parents can almost afford anything, and they're going to use fees from those 80% to subsidise the 20% who need a lot of bursary support. So they have a very deliberate strategy, set the fees high for headline level, but be very ready and very willing to give bursaries. Schools outside of London might find that actually all of their, or sort of the majority of their parent body comes from what I've just described as the squeezed middle. So probably need to be setting their headline rate much lower and trying to manage bursaries in a much more targeted way. Pupil numbers. What are they now? What are they going to be in the next 5 years? And what does that mean to our cash and profits over the next 5 years? Have we suddenly in Stamford there's a new raft of house building that's likely to happen over the next 5 years, which we can forecast a growing demand in 5 years in our junior school. It's going to take us time to sort of make that strategic adjustment if we want an extra form in our junior school. So be thinking ahead on what that means financially. Other income. So have you looked at other sources of income? So this, I've already touched on at Stamford. We open our sports centre. We've got a school shop. We do summer lettings. Other schools have wedding businesses or let their schools out for TVs. Some schools have fantastic foundations and departments and getting donations from donors. As we all know, other schools have opened schools internationally as a source of income. There's lots of non-fee ways of earning income around at the moment. What I would caution is make sure that you're doing something that's right for your school. Don't just look at the school down the road and say, yeah, they've opened a school in China, it must work for. If it's working for them, it would work for us. It might not. And don't look at the school down the other way and say, well, they've got a full-time fundraising director who's bringing in £1 million a year. That might work with their alumni. It might not work with yours. So explore these things, but don't just copy what everybody else is doing for the sake of it. Make sure they're doing something that's right for your school. Marketing, and I've kind of put this in here as an income, is cost in income. How do you want to be spending your marketing budget? It's finite, but it has implications from a financial perspective. If you're going to spend money, if your school wants a short-term return, go to China. Go and spend your marketing budget on recruiting overseas. Increase your number of overseas borders. You'll get 2 years of fairly significant cash. Whereas if you invest sort of on marketing in your junior school and reception, you might have these day children for 13 years, but the return is slower. I would love to be able to say spread your budget across all of them. In truth, that might not be feasible for everybody. So it's just a case of thinking, if I spend money in this particular area, what does that mean in terms of income this year over the next 5 years? Then on costs, conversations to be having. How do we compare to other schools? So do some benchmarking, and there is a lot of benchmarking out there in the sector. If you've never seen it before, go and ask your bursar about the Baines Cutler annual survey and read that. And certainly see if you can read a copy before you apply for any headships. It will give you a real insight into where the sector is financially and what averages are looking like. But also, I would caution with benchmarking, ask the question, is average good enough? So that my average schools, the average school, remember, includes some schools that are doing badly. So in truth, you probably want to be better than average. Timetable. So as we just touched on, if you think back to the pie charts, as I said, you can have how you utilize your teachers has a huge amount of impact on your costs. So ask the question, can we afford to offer Latin A level? Can we afford the amount of non-contact time that we're offering? Are there any roles that a teacher is doing that could be done by non-teaching staff? So understand what these timetabling decisions are doing to your in terms of finances. Salaries. What do our employment costs look like in 3 years' time? Is that affordable? And this is particularly relevant at the moment with the government having a very deliberate strategy of raising starting salaries for teachers. So, starting salaries in the state sector are going to be £30,000 within the next 2 years. If you're going to be competitive, you've got to be offering 30,000 plus. So what does that look like? Is that affordable? Are we building that into our budgets now? Expenditure. So we saw those pie charts and the averages. Where are we spending money? You can only spend that every pound once. And are we spending it in a way that actually is our advances our competitive advantage? So we've got around for sport. Are we focusing on sport? Have we've got a rotation for drama? Is that where we're focusing? So are we getting the most impact with how we're spending? Building things. It's always great to be building a new sports centre, theatre, drama studio, something, but can we afford it? Does it add value? Is it necessary? What's the return? And then the big question to be asking your Bursar at the moment is, can we survive another shock? What if we have another COVID? What if we lose business rate relief in 3 years' time, 4 years' time? What does that look like? So, final slides. Five tips for you if you are looking at applying for headship. Go read the accounts of the school before you apply. Understand I'll be honest with you, there's some schools out there that are in financial, well, I'm not going to say difficulty, but are more financially stretched than others. Know that before you make an application. Once you come ahead, demand that monthly information, not termly. It's not good enough for you. Profit does not equal a cash. And then the bottom two, know where you're spending your money. So ask Bursar those sort of monthly questions, but as head, concentrate on the big stuff. It's those final 2 slides on strategic finances that you should be really focusing on, not the day stuff. So with probably about 2 or 3 minutes to spare, I think we've got probably literally time for a couple of questions, Alicia, before I hand over to Russell.